Good morning, everyone. Hey, this is Rick Kaufman, your host with LMA Trading. Hey, it is Thursday morning here on August 12th. Hey, yesterday was quite the day in the markets. Actually, this week has been kind of one of those weeks where it's just like, what's going to happen? What's going on? We see volatility dropping in the VIX. The markets were red and then they were green, and just not a lot of pre-market, just not a lot of conviction, not a lot of volume, not a lot of movement. But we are setting new highs on the day in pre-market. So we're going to kind of jump into this here a little bit. Right now we are green on all indices, in our four main indexes we look at in the Nasdaq, the Dow, the Russell, and the S&P. So before we do, though, let's just kind of cover a few of our housekeeping points here, and make sure that if you're new here to LMA Trading and our pre-market prep, I'm a 60-year-old person who is a trader. I don't day trade. I swing trade primarily. I trade options and stocks, and primarily play, low risk with high probability setups is what I look for. Because at an older age, I don't wish to risk a whole lot of money. But with that being said, stocks and options are not suitable for everybody. And that, anytime you put money into the market, all 100% of your money is at risk. You could lose every penny that you're playing if things turned against you. And they do turn against you quite often. And so you have to be, right on the spot to try to preserve your capital. But it's important for you to know that if you're not aware of that, because, in this past year and a half, 2 years, a lot of people made a lot of money, and a lot of it has been luck. And I'm sure that right now a lot of them are blowing up their accounts because they never really considered these things. That's just my personal opinion. The other thing is I am not a financial advisor, nor do I give financial advice. And on top of that, you trade your money, I trade my money. You can lose all of your money. You should do your own due diligence. You should pick your entries and your stop losses and your exits. You play your plays. You design your playbook with your setups and your strategies. And, these videos here are for my own personal education. This is part of my trade journal. I document my pre-market each and every day. It does help me to open up what I see, because I'm talking out loud. It's kind of like thinking out loud. And I just happen to share that with you all and let you kind of see what it is that I'm seeing. And would love your feedback, would love your comments. Make sure you click the subscribe button and follow us. We will be putting out some additional videos on my charts and a few other things here, what I use and the platforms that I use and how I have them set up. So with that being said, let's jump into this pre-market prep. So we're going to start here with the Dow. Oh boy, what can I say? Very bullish. This was the drop last year in March of last year, and on the weekly chart, and we've been extremely bullish ever since we found the bottom here at 18,000, and we've almost doubled that, and in just a year and a half. But we are showing some weakness. In our TTM squeeze, we do show decreasing momentum. We are in a weekly squeeze. We've been in a daily squeeze. The daily squeeze fired 2 days ago, and that's why you see this pop above this range right here where we were squeezing. We were squeezing as we was coming down. We hit the 21. We picked up some momentum and pop. And then, this kind of coincides here with the weekly. And right in this area here. So, we are definitely pushing to new highs, and we've set a new high as of this morning, and that is 35,428. Most likely, I would say we are going higher. There appears to be some rotation going on, mainly because I believe in, if we take a quick look here, and then let's see, just take a look at TLT. TLT is kind of an overview of the bond market, and the bonds. So, we've been playing this kind of to the downside here, and it's been going through some chop. So, this here's kind of the driver here. When as you see the TLT, as you see the bonds move, um, and as the bonds go higher, as far as the 10-year, you're going to see you're going to see the Nasdaq tech stocks, because they borrow money, and they don't like higher interest rates. So we're going to see those begin to drop. At least that's my indication, and that's kind of what I've noticed here. And plus, I also follow other people that have also kind of said the same thing. So with that being said, let's go ahead and jump into the Nasdaq. And we have put on a long bearish play on the Qs, on the QQQ. I believe that if you go back in time, and we're going to pull up another chart here real quick here. Let me minimize this here and pull up this chart here of the Qs. We're going to go out. Let's minimize this so we can get a better picture, and let's go out to a weekly, much longer term weekly. Let's go weekly, and we will about 10 years on the weekly. And this is something yesterday we were looking at. Typically August, things slow down. If you've been around for a while, August is usually a slow time. And sometimes when the buying slows down, prices begin to consolidate and drop. And then that carries into September and October. So we're closing in here in September, October. It appears that, on the long-term chart, still very, very bullish. We could get a nice little pullback and still be very bullish. So, this is not going to change the trend. I don't, but if we go back in time and we look at, the October, this was October of last year, September and October, we get a pullback, over a period of 3, 4, 5 weeks, back to the mean, which is the 21, and into September. So that's one indication here. Let's go. Let's see. We're September, and October. Let's go. September and October. We get this pullback here going into October, and let's see. We've got. Let's go back a little bit further here. And as we look at this here, there's August, we're running here, and then September, we hit September, October. And so this kind of, there's a pattern. Only thing is we don't know when that's going to happen. So, so we have to be able to withstand, basically the markets to continue going up. So we put these on as a hedge, because I believe that it's going to play out that way. Also, we are looking at the IW. Let's see. Oops. And also we did the same thing on the IWM. And so we are looking for pullback here in the IWM back into this area here. And let me just kind of pull up the Qs too, so you can see that here. And so, and this is the, this is the iShares or, of the Russell. So, we've been kind of consolidating here since we've hit this high. And as you can see, the Bollinger Bands are beginning to really tighten up. We've got momentum. We've been squeezing for quite some time. And I believe that, as you can see, the RSI also has been, decreasing in relative strength. So this is probably going to drop. And so we're targeting this here. So we put on a put debit spread, and so we put this on here about looking as this the return to around the 190, and that's in the estimated move in that particular point in time. So that's kind of what we're looking at there. So with that being said, let's go ahead and jump into the Russell. And so we are, here IWM is kind of, it follows and mirrors the Russell. So this is what we're seeing here in the Russell. Now, let me show you one thing here. We were playing this to the downside on an expiration for Friday for tomorrow, and this was on the rut, and we got the move we were looking for yesterday. And yesterday we dropped here. Let me minimize this here, and let's go to, yeah, let's do this. Let's go to the 4-hour chart on Russell. Yesterday, we got this move here that we were looking for. Okay, it pulled back here into this zone, and we popped, and it triggered right there. That's where we had our profit take. This was 65% of our max profit, and it pulled right down to it, touched it. We got filled, so we got a nice profit, and then it popped. That's one of the reasons why I can increase my probabilities by not sitting back waiting for 100% of the max profit. I look for between 50 to 65%. Typically, I'll shoot for about 65%. I'm happy with 50%. Base hits every single day. Base hits, base hits, base hits. Those increase my probabilities, and also, looking at and keeping the risk low. Like I said, like I've always been saying, I don't like losing money. And so when you look at this on, on the chart right here, it pulled back, came down here on, it, moved. It gave us the move of, this is a 3 ATR on an intraday. So it gave us the price action, and I mean, right to the money. Now that's not, that was, I would say that was just luck of the day. And then in turn, now it's rallying to the upside, and from there it went all the way up and has seen a there's 1, 2, 3, a 4 ATR move on an intraday is just that would have been a great day trade too. So okay, let's continue going here. And now let's take a look at the S&P. The S&P, we have a call, actually a SPX. We were playing the XPX. We have a, not a call, but we have a put debit spread, and or put call. Man, I tell you what, I need more coffee. We have a put credit spread on this as part of our 10 to or 7 to 10 days of DTE, which is days to expiration. So we play this, and we play the rut on short term for income, and then we put on some other plays. And I will kind of show you what I'm looking at today. Before we've got an outline of about 25, 30 stocks that we're looking at, and I'll show you one that that I feel might be worth watching if you're looking at a potential put debit spread. I think there's definite play there. So this is something that I'm looking at here, and it's setting new highs. We are staying very bullish, and so this makes sense. And so we continue. We would like I put the Qs and the IWM as long-term hedges because we're going to get a pullback, but we're still playing the markets as very bullish, and so we're going to continue doing that and be prepared. If the market pulls back, we're going to pull our longs off and we'll play everything to the short side and wait for us to find a bottom there and get the bounce. So the other thing that I'm looking at here is I'm looking at Goldman Sachs. Oops. I'm looking at Goldman Sachs. Goldman Sachs has been on a tear here this week, or for the past week. It's made a huge move from about $349 to 400 over the past couple weeks, and it popped down here on the low. It had earnings, popped on earnings, pulled back, and then turn around, and because the financials went through, this was during the week with financials reporting and everything, and so there was not a lot of good news coming out of earnings that week. We found a bottom down here. This is a double bottom, and right here. Also, you can say we've got a W pattern. So if you're looking at this here, you've got a W here, and then kind of coming in. And bam, that's a nice little W pattern that you see. And so, so this is a double bottom, and we found this double bottom, and price took off. When it broke this level right here, then we popped. Now, this is way overextended. We are way overextended here. The squeeze fired, 4 days ago. Typically, when we see this here, this is about 8 to 10 days of momentum to the upside. As you can see here, we also have decreasing volume, and so I am looking at at the volume to continue coming down. The MACD is way overextended. We are quite a ways away from, our mean, which is the 21. So I'm looking, this is a reversion to the mean play. So looking at, a possible play to the downside. So we'd be, might be looking at a put, buying a put here, or possibly put debit spread, and, to minimize the risk a little bit, because, we'll probably see some more upside on this. The shares right now are indicating that they are moving up this morning. But as we see, when the markets go up, all, rising tides raise all ships. And so, as long as we keep seeing the S&P and the Dow setting new highs here as part of this rotation, we'll probably see Goldman Sachs continue going up also. This is the play. So I'm really watching this play here. So, it's got this nice pattern, this double, so very, very bullish. And I missed this along with probably a lot of us. It just wasn't really on my radar. And now it is. So where we go from here, we'll just have to wait and see. So, that's one that we're looking for. We got several other stocks, but this is part of my pre-market prep. So again, do your due diligence, study these charts, look at these, and determine what makes sense for you. This may not be sense. I mean, this is a highly bullish. I don't, always look at these because they are bullish. And in this market, things just keep going up, regardless of even though you believe that this is going to come back down and probably look at fill the gap. So, so I'm, kind of looking at buying, the 400 or the 300, maybe 390, or possibly be coming down here the 380 if we go out a little bit further. But, I believe it's going to revert back here and possibly fill this gap right here. And when we do, then we should get another bounce to the upside. So this has got to cool off here a little bit, and as they always do. You can see here we get to 3 ATR. We usually are going to see a bounce back, but we touched 3 ATR here, we went higher, touched it here, went higher, and now we're higher, and it looks like we could be opening up a little higher today by maybe 50 cents to $1. So with that being said, guys, happy trading, and may your trades be what you want them to be. And make sure you click our like button, subscribe, comment below. And if you've got a stock or you've got something that you want me to take a look at and talk about, we can do that. Once we compile a few of those, we will put together a special video for that. And so this is what I'm looking for today. The markets are, slightly up, not up a lot. So I think we're going to meet some resistance. They're kind of a little choppy, but the Dow is behaving strong this morning. The S&P is behaving strong this morning. So these are looking good for several of my plays because I have long position. I've got a credit spread on Apple, and then I have some short plays on long-term short plays on IWM and the Qs. And so that's kind of where we sit today. With, like I said, closed out our RUT for 65% profit. We're pleased with that. And so we closed out a lot of our stock trades on Tesla and those others yesterday. We went ahead and locked in profits, probably left some money on the table, but we can always jump back in. It's just the way the markets are looking, I'm expecting a pullback. I just don't know when. So I thought it made sense to lock in our profits on the stocks. I cut pretty much all my stock except for Chewy. So I'm still holding some stock in Chewy, and because I think Chewy's got some more room to run, and it also is doesn't necessarily behave and follow the same pattern as the Qs because it is in the Nasdaq. So, so with that being said, have a great day, and we will talk to you guys mañana. That is tomorrow. All right. Awesome. Get some more coffee. Caffeine yourself up or whatever. Get caffeine. All right. See you guys.